All right, unemployment breaking news. The U.S. jobs increased by 4.8 million in June versus the 2.9 million estimate, which puts the official fudged unemployment rate at 11.1%. So the recession's over. That's it. Fed can stop printing money, and we can stop worrying about everything. And so this this number is obviously uh, an interesting calculation, but the new unemployment figures are still coming in at over 1 million, and the like the actual number of people working is below 50% still. So the actual number of people working has collapsed. But two interesting things happening now. They're talking about extending the PPP loans, which those just matured, so companies are allowed to lay off the people that they were holding. The PPP loan was basically paying the companies to not lay people off. And so they're talking about extending that. So I don't know if we're going to get a wave of layoffs right now at the end of the PPP period. It'll be interesting to see next week if we get that or if we get some modification to those loans. And then the unemployment bonuses will be ending at the end of this month. So that's the end of a bonus for people not going back to work. So yeah, we'll see if the government the helicopter money continues, and we'll see if companies start laying more people off at the end of this PPP period, which should start right now. So the market's going to be closed tomorrow. We're not going to get to see the balance sheet. They'll post that probably after market today sometime. But the last Fed balance sheet is still aiming downwards, and the Treasury General account is still going up. So there's no new liquidity in the last 3 weeks from the Fed or the Treasury. And the S&P has bounced off of this general area here. It didn't break down into the hot zone, and now we're up at top resistance in this area where we've been waving around. So this is a really interesting area for the S&P, and you can see back here we reversed down off of this 2-year bull market line that was supporting the market before it crashed for 2 years, and we rejected down off the bottom of it. So it's still semi-bearish territory based on that line, but we're above the long-term moving average, so that's bullish, and we're above this line, so that's still bullish, but we're sort of in between bullish and bearish market area here, and we're just chopping around doing crazy stuff. And so here's a couple trade setups. This is not investment advice, and I generally don't trade the S&P, but the S&P is a really good look at the market usually. So let me just draw some lines here. So I mean, the bulls, want to break this. You want to get out of here, bounce off of it, maybe flag out a little bit. So just get above this area, hang out up there for a minute, because this run will probably, it's probably not going to be a straight line like all the way up here. Probably in the bullish scenario, you want to break up and then kind of flag out and do a bullish kind of flag, and then you could get up here into this area. And then you're not clear yet for the bulls because this is that major bull market support line that we reversed off of last time. And so this would be new highs relative to here. And I'm sure people will be getting super excited if it got to the highs over here, but getting stuck under this thing or doing like an island top or a parabolic reversal around this area is definitely something to watch out for if you're the bulls. You want to get up here and get steady and not not do another one of those reversal shapes off of this line. So yeah, there's two areas to break now for the bulls, and that could potentially happen over the next week or two. And then for the bears, if you get up here, obviously this would be a monstrous bearish reversal. If you reverse off of this thing again, that could be a huge sell-off wave that lasts a while. You could get like a more long-term bear wave off of that. But just right now, right now we haven't really made it out of here. And so, you know, a bearish move down to here today or Monday or something like that is possible. And then, of course, the bearish target is back down here into the hot zone, which we got the moving average, the consolidation area, and we have that 12-year bull market support line that we're above. And so that's a lot of stuff for the bears to try to get through. So to actually get into bear market territory, the bears have to get through this crap down, probably backtest this thing, and then this would be bear market territory. And this up here would be bull market territory. And yeah, it could still potentially be pretty steep stuff. But as for right now, we are officially in the middle of nowhere. And let's check out the momentum and just see what it looks like right now. And this is the weekly candlestick. So this is a long-term outlook. And we're getting close to bull market territory. But for the bears, if this reverses back down here, underneath the middle of this area, so this is still bear market territory down here. It hasn't made it into bullish long-term territory yet. And a bearish reversal here would signal more bear stuff. But it's making a bullish move. So that looks more bullish than bearish on that chart. This has been in bullish territory since a while ago, since back here. And the bearish move down has been halted now by this wave. And so this is just kind of stalling out in bullish territory. So this looks pretty bullish. That's like a monthly kind of outlook with bullish momentum. And it's not quite moving bullish yet, but if it doesn't get a bearish reversal right now, it's going to start looking pretty bullish. And then as we kind of zoom in here, yeah, we're just kind of on a bull run. So this is bullish, bullish, bullish momentum up here, and it's kind of stalling out here, as you can see. And so, yeah, for the bears, a bearish move from here has to actually move down on the chart. It has to diverge hard and get down here, all the way down here. So a bearish move needs to be pretty decent. If it just kind of, if the bearish activity just kind of waves out sideways and just slowly pulls this thing down while the chart's waving out, then that would be bullish look to break after that kind of flag. So let's look at the momentum, mostly bullish now, and what kind of trading action we get along this line will be really important in today's session. And then the market's closed tomorrow, long weekend. And yeah, so 3-day weekend, potential for the market to kind of gap one way or the other after the 3-day weekend. And so the news came in pretty good. But I mean, whatever. I mean, it's obviously, I mean, the economy is obviously still in trouble. There's all tons of new cases of the virus, and they're shutting states down again and all kinds of stuff. Let's see if the dollar is holding up. Yeah, dollar's holding up. So this is a good resistance pattern. And let me jump out. We're kind of at bottom resistance all the way back to the financial crisis. This is like a 11-year kind of bull support area. This is 2008 back here. And so we've been on a bullish kind of run here since, I guess, 2011. And so we're bouncing right now off of kind of support to keep this long-term bullish action going. But right now we're not getting a ton of activity. It's just kind of wobbling, slightly bullish, kind of near support. So this is really important for the dollar. If it can break down below this, that could get into a dollar bearish scenario. And if it just stays up here, then it looks like it will stay pretty bullish, and it doesn't really need to do much. Just kind of keep going on this line that's been on for whatever, 10 years or something. So the dollar is still holding up. The yen is just blah. Let's get into. I've been looking at the yen because the yen chart sometimes breaks before the dollar chart breaks. And so we did get a breakdown of the yen here. And each one of these kind of gap candles that we've gotten on the yen chart has preceded a drop in the S&P. And we just got one yesterday, so that could, or today? No, yesterday. Yeah, so that could potentially signal a move down. We still have a strong dollar. The yen broke. Bitcoin's breaking down. That's interesting. Bitcoin keeps kind of following the market a little bit too, which is weird. And this is really a really interesting one, is that the Qs, the info, well, I mean, the Fed's buying bonds now. So they've announced they're going to buy Apple and Microsoft bonds directly, which is, these leading stocks in the infotech sector here. And yeah, so the Qs are off the all-time highs here, and the XLF is not really doing much. It's just kind of hanging out. So this is really interesting to get a bearish chart on the financials, and maybe it's trying to break up a little bit now, possibly, but it doesn't look that good. And then the small caps are up a little bit, but not insane. It's not insane like the industrials or something like that. So yeah, it's not really pointing at much there, but there is a gap growing between sort of the financials, small caps, stuff like that, and the leading stocks. And the divergence between those is a little risky, I suppose. But the VIX is down. Where's the VIX? Yeah, the VIX has come down all the way down and closed this gap. So that looks pretty bullish on the VIX. And no, I don't know. Bond spread. Yeah, not much going on. Okay, so that's kind of a look. That's kind of a look at the markets. Like the Qs are looking pretty bullish and continuing to go. And the S&P is in a precarious place. So the overall market is just kind of in an upper resistance area, really. So, I mean, do we reverse or do we kind of flag out? So the more this flags out sideways, the more bullish it's going to look, and it should. For an actual bull signal, you want to break it and get up here and flag out a little bit higher than where it is now. If it's kind of staying below this line, that's a little kind of risky for a bullish trade setup. But yeah, so yeah, the bears want this to get down right now, and the bulls want to flag it out. So that's the stuff for now. I don't know if there's anything else going on. The economic numbers. I guess the unemployment number is okay. It's better than expected, but there's really not much good going on in the economy. But yeah, the fundamentals have still clearly separated from the technicals here on the chart, and there's no indication that they're going back together anytime soon. And the more stuff that the Fed buys up, you can keep that kind of price value ratio kind of fundamental stuff pretty far away from the stock prices. And yeah, that's the big thing for me, is checking the balance sheets and seeing if the Fed's pumping money in right now, which as of last Friday when it posted, there's no new money going in from the Fed or the Treasury. And if that changes when it posts tonight, that's big news. And I'll definitely be covering that soon. Yeah. So please hit the subscribe button, and that'll probably do it for this one. And I'll check back in when I get those balance sheet numbers, because those are really important. And happy trading.